All right, you guys, I'm going to go to this trade right here. This is the one that I sent out to everybody last night in the copycat group. So I'm going to do a chart breakdown so you guys can kind of see the overall, what was I looking at. You see that I took all of these different ones on the JPY pairs. I saw that the JPY was having some trouble. We did get an arrow on the 30-minute with the simplicity system, which, by the way, the sale is going to continue for you guys if you want it through Christmas. But bottom line is, you can see that it was already had the arrow. But why was I feeling so comfortable taking this particular trade? And this is what I'm going to teach you guys today: how to feel comfortable with the trades that you're taking, because sometimes you'll take some trades and you're feeling very, very nervous about it, don't feel good about it. Then if that's the case, just avoid it. But why did I know this one was going to be okay? Here's a simple way I did it. I went to the 4-hour time frame, which you guys know is my favorite time frame to go to. And what do you see? You see a clear downline trend. Okay. And that was the first thing I saw. So if I was to draw a trend line right across the down, there it is. Okay. And so therefore on the 4-hour, and let me kind of clean this up a bit for you guys. And the Sexy Analyst already has it. Our trading system Sexy Analyst already has it built in with the trend lines. But you can see it was respecting the trend lines on the 4-hour time frame, constantly hitting it. So when it came up here to retest this, which is what all the JPY pairs did, they were already in the downtrend. They did a sharp pullback, came across here, and now they were testing right here. So that's when I felt very comfortable hopping in on this trade. And you can see from my trend line that the arrow is sitting right there. Now, what I did was, it started acting a little bit funny. I said, okay, let me get out and try to wait a little bit. So I jumped in early a little bit, closed it out by a couple of pips. So really on this particular trade, I made 60 pips, but I closed out the first position a little bit early because I said, oh, it's trying to pull back a little bit more. I have a issue because I'm always trying to get in on a perfect entry, which you should avoid. Don't do that. That's always been my pet peeve, and one of my downfalls is trying to get on the perfect entry. Okay. And so when it started pulling back, I said, well, maybe it'll pull back and do a double top and then I can hop in on it. I knew I was going to get in on it, but so be it. I came back a little bit later and I said, oh, this is the head, and it created the shoulders right here. Okay. And so I'll draw a line across here so you guys can kind of see that as well. Bing, bing. Let me bring this down. Okay. And there it is. So as you can see, here was the peak. And then it created, boom, went up, retested, and I said, okay, that's good enough. Let me just hop on in before I miss this whole trade trying to get the perfect last little pip. Some of you guys do the same thing, so don't talk about me. Okay, trying to get that last little extra pip. I don't want to get that extra pip. I want the perfect entry. And you missed the whole thing. So what I did was I jumped in. We did make a 60 pip move, but again, I deducted the pips that were made. So on this thumbnail, it does show 60 pips because it was a 60 pip move on the second position. But in actuality, I'll give it about 42 because, like I said, I got out on the first position when it pulled back just a little bit. And then when it dropped, there we go. But on the rest of these, as you can see down here, the CAD JPY, I didn't send it out because I don't try to send you guys out too many trades because Dr. Elvis sends out trades. Sometimes Mr. Genie sends out trades, and we don't want to overwhelm your portfolio. Number two, if the trades go wrong, I don't want on your personal portfolio that, hey, all of these trades were open and I was wrong on all of them because they were all attached to the JPY. So what I did was I just picked the one that I thought was the best fit. And so again, I went to the 4-hour time frame and said, okay, la di da. The one that I liked better at the time was actually GJ, which you can see right here, dropped to the 30-minute, and there you are. But see, thank God I didn't. Why didn't I choose that one? Because that's the one that had some news events last night, and if I would have chose this one, I would have made a mistake. So I'm glad I didn't choose that one. CAD JPY also did the same thing. So again, you can see there, USD JPY, it didn't move much. So I actually got out a few pips and they called it a day. I'm not going to be trading this one right now. I actually am flat on the market, meaning I don't have any open trades on my personal portfolio right now because tomorrow is the Fed interest rate news. And so I don't trade during Fed interest rate news. That's just something I will not do. Had it not been for Fed interest rate news, this would be definitely a trade that I would be in. This is one of those that I was telling you guys about on the other video. Down, slide, and look at what it's doing. Down, okay? When it's going in an uptrend, it'll go up, slide, see that sideways action, and up. Okay, up, slide, up, slide, up, slide, up. And then when it goes to the other side, it's just the same thing heading to the downside. In other words, it's just like walking down a set of stairs. Okay, now now the trend has changed directions. So as you can see, here we go. Slide down, walk over, slide down, walk over, slide down. All right, so anyway, I just want to show you guys this video just to show you guys the trade that I sent out to you, the breakdown of it. What was my thought process, just to help you guys along, so that, if in case you're trading and you're in doubt, just stay out. I've always said that for many years. Whenever you're in doubt, just stay out. So you can clearly see my logic as to why I took this trade. I was trying to wait for it to come back up to give the perfect entry. But, that's when you start missing opportunities because you're trying to be too perfect. And so I'm glad I just said, you know what, the heck with it. I'm just going to hop in this trade and let it do what it do, baby. And thank God I did. You can also see it from the 15-minute. That it was a really great entry. And now you can see the head and shoulders point that I was telling you about. See, here's the head, and here's where it came over here. I saw this right here, and I said, oh, this thing may come up some more, and it could do a double top. But when it stalled out right here, I said, you know what, that's good enough. And I hopped in on it right about here. And again, like I said, you guys, we got about 60 pips. It was actually more than 60 pips, but I closed out where I'm at my entry at 60 pips and I closed when I woke up this morning and I saw it hit the support, which you can see that here. As soon as it dropped and hit that support, I just took what we can, and there we go. All right, simple as that. So I'll see you guys in the next video. Hopefully this video will help. Leave a comment in the bottom. Let me know if you want me to do more breakdown videos. Because I haven't done them in a while. You guys haven't said anything as far as you want them or don't want them, so I don't know. But if you want more breakdown videos in the future, just let me know in the comments below or in class tomorrow, okay? Because we will have class tomorrow, which is Wednesday, okay? Peace and hair grease. Enjoy your day.